Good morning. Top five types of commercial properties explained. So, when it comes to building wealth through commercial real estate or CRE, understanding the different property types is the foundation for making smart investment decisions. Each asset class comes with its own risk profile, tenant base, as well as financing options. So, whether you're an investor, a developer, or a business owner, knowing where your property fits in the CRE landscape can unlock long term opportunities. So let's break down the five main types of commercial real estate, and more importantly, how each can fit into your investment strategy. Number one, office buildings, tried and true. Office properties range from high rise towers in urban centers to suburban office parks in towns like Katy. They're typically classified into Class A, B, or C, with Class A representing the highest quality buildings in prime locations. So, why does it matter? Well, office demand is evolving as hybrid work reshapes leasing trends. Investors in markets like Houston and Katy are seeing opportunities in smaller, flexible spaces and medical office conversions. So here's a financing tip. SBA 504 or traditional CRE loans are ideal for owner occupied office buildings. If there's a heavy investor concentration, then we have to look at different options. Number two, retail centers. So, retail real estate includes strip centers, standalone stores, and large shopping malls, even. In suburban areas like Fulshear and Brookshire, open air retail mixed with dining and entertainment is outperforming the traditional mall type structure. So, why does this matter? Well, retail centers thrive on location as well as visibility, and the best performing assets mix daily use tenants like a grocery or a pharmacy with lifestyle anchors. So here's a financing tip. Non recourse or CMBS loans are common for stabilized, income producing retail type properties. Industrial and logistics facilities. So this sector has been booming, especially recently in West Houston along I 10, most particularly in Brookshire with the recent Tesla announcement. Industrial includes warehouses, distribution centers, flex space, as well as industrial outdoor storage. So, why it matters? E commerce, AI manufacturing, and logistic companies are driving sustained demand. Long term triple net leases and low vacancy rates make this a favorite for investors. So, here's a financing tip. DSCR loans and bridge to agency programs provide flexibility for acquisitions or expansions if the numbers don't quite pencil right from the get go. Multifamily properties. So, multifamily includes apartments, duplexes, and mixed use residential developments. Now, as housing affordability tightens, demand for rentals in Katy and Richmond continues to rise. So, why does it matter? Well, multifamily investments really are a good balance between risk and return with steady cash flow. They're also among the easiest to finance, especially in volatile markets, or even in volatile markets, not especially. But here's the financing tip. Agency loans, so Fannie, Freddie, or DSCR loans are investor favorites for this asset class. An agency lends in smaller markets where a lot of folks might not. So that's something to consider. Land and development sites is number five. So raw land or entitled development sites are often overlooked, yet they form the foundation of every future commercial project. So why does it matter? Well, in high growth areas like Fulshear, strategic land banking offers potential for both appreciation and resale to developers. And you're not completing the project, so it's not heavy lifting. So infrastructure projects like the Grand Parkway can amplify the value out in this west side of Houston. Here's a financing tip. Land loans or construction to perm financing options are best suited for investors planning new builds. And here are the final thoughts for the day. So each commercial property type serves a different investor profile, from stable income generators like industrial warehouses to a high upside plays like land development. The key is aligning your goals, your financing strategy, and your market timing to maximize your returns. I am Bill Rapp, of the Viking Enterprise Team at eXp Commercial. We serve Katy, Fulshear, and West Houston. Please check out my website, HoustonRealEstateBrokerage.com. And that is for the day. You guys have a good one.